Sorry, I had the mic off. It should be on now. Welcome everyone. Monday morning. Just got back here from a weekend away. As you can see, we're in the sun in a nice little cabin away for a couple of days, and it is a bank holiday. So hopefully you guys can all hear me okay. And as you can see, sunning it up. So going back to the routine. I just wanted to test, but it should be fine on my side. I'm just going to check the audio is okay. Should be able to hear it back on my PC. Can you guys hear me okay? Just let me know if you can hear. Should be able to hear me. For some reason, I can't hear the YouTube stream. Just going to do a quick test. There we go. There we go. The stream is delayed for some reason on my side, but that's right. That's better now. Okay, I'm looking here on the NQ, so I'll just do a bit of a breakdown from Friday, and we will look into today's action. So I haven't done any chart. I haven't done any charting over the weekend, so this will be pretty much brand new. So I'm just going to delete all of the levels, all the drawings that I have, and we will do this together. So everyone on YouTube, welcome again. Been away for a couple of days, back now, and it is bank holiday here in the UK. So most likely going to probably be a smaller volatility or volume day, but I'm going to be at the desk just to see what we can get and see if we can carry on the trend from Friday. So the extension that we came down into is going to be the same draw that we've been using for a while now, and that is pretty much that same anchor new high. We just haven't completed that target yet. So the 50 was down here. And strictly speaking, you can keep both draws on just because one of them hasn't yet completed. So either draw is fine. I think we get reactions at that 24,369s as well as at some point in time 24,652s. You can see obviously we've got the volume support all the way back down to these highs over to the left. And so far, that is pretty much where most of the volume has taken place. So it would be really nice if we could get some sort of high to high back from the Trump tweet back in April. That would be like beautiful down here at that halfway back, or even that same anchor new high 38. Either of those levels would be really, really nice for a long-term play. You know, for your long-term portfolio, just averaging down into those levels would be beautiful. Gives us a nice 6% drop, and it's where most of the volume is. But so far, that is pretty much what's holding us up. And you've obviously got that support at around, call it 23,000. So at the moment, the anchor that I'm having on my screen is going to be that 38% retracement, which is pretty much 23,156s. Going down to the half an hour time frame, the extension or the play from last week, if we go back to Friday, was just absolutely incredible. The Friday I didn't trade, and we had I don't actually mind for not taking anything for not being here, because obviously it was a pretty much, it was a binary event. It was either going to go up or down, and obviously markets are somewhat designed to go up with interest rates and inflation. Escaped my mind then, that big one. And but it was one of those plays where once the move had happened, there wasn't really much from a value point of view to actually get. So I think there's probably a lot of people trying to chase the FOMO from not getting the move on Friday, which is absolutely fine, but I just think the smarter move will be to get a rebalance, which I'll break down in a second. So why was Friday so clean to the long side? Well, we had already broken down. We had reached weekly magnitude on the ATR within 1%, and you can see that is here. Okay, so we had already achieved weekly magnitude lows when we came down to do a 1, 2, 3 low on the go, 1, 2, 3 go on the lows. It wasn't surprising to then take back up into weekly highs, right? So that was kind of expected, easy to say in hindsight, but again, the levels had already been set. It kind of made sense. I just wasn't at the screen to take the trades. This is why having a personal account for just a couple micros is so good for these type of moves, just because they're just so kind of low risk. You can risk the weekly low, and you got such, again, the point range on here is just like ridiculous, like 5 to 600 points with very small risk. Anyway, going into today's action, again, this was Friday, so you can see we were above the ATRs on the day. So once that news had hit, you didn't do anything, right? You know, there's a lot of people saying Friday was a great trading day. It was if you were just YOLO long from the open, right? But ever since then, ever since that candle at 10, pretty much didn't really do much instead of just sell the highs, buy the lows, sell the highs, buy the lows, right? So going into today, the best thing, what would happen is kind of what we're already seeing. Value being established at a lower price from Friday, which just gives us that consolidation and potentially have an A, B, C type of move, which is what I'd like to see. I don't necessarily think we get that today, just purely because the volume being a lot lower, especially with European traders not actually being at their desk. As I like to say, I would much prefer getting above Friday's high, which I imagine if we do that today, I just think, as I said on Friday, your range just isn't as good. I'll still most likely take the trade for like 50, 60 points. But it's just not A+. What would be A+ if the Friday high was down here? This was your volume support, and then you've got all of this magnitude to the upside, right? It's nearly double the range, but we just don't have that. So we just have to take what we have, trade what we have, not what we want to trade. The market we're in, not the market we want to be in. We are at support. We do obviously have this weak volume shelf, which is just measuring the past 150 bars on here, which is obviously from this candle here, so not exactly surprising. If I go to an hourly chart, you can kind of see what that looks like. Most of the volume is obviously from last week, last Tuesday, when we had that move down on the open, that vicious move down into support. And now hopefully what would be nice to see is if we can get some kind of retracement down. And what I would prefer, again, doesn't mean it happens, but if we could get something like this, I think this would be much nicer to see. It's completely possible. I don't think I would trade any of this at this point. I'd rather let this come down to, again, I don't know if it's going to. I think if you lose 455, it gets very, very likely and choppy in this area. So this is kind of your last line in the sand for the day, is basically 456, in my opinion, which is very close to Friday's lows. If you stay below there, I would argue you probably come down into some sort of rebalance into this area here, which is a really nice rebalance of the hourly ATR candle. And if you could trade a full halfway back inside this area, then wherever your high is today, let's say into this area, this is what I would prefer to see going into the rest of the week. Something like, and again, this can happen tomorrow. This can happen tomorrow, but if, for example, if today's high is where we are, I'm not saying it's going to be, but if it is, then I don't mind waiting for this to trade. Tomorrow or Wednesday, we get above those highs, then we trade that to the long side. So let the market show its hands today and tomorrow, and then potentially trade that move up. Or if this is an inverse, do the inverse, right? That's all I would be looking at. So same sort of thing, just let the market show its hands. We will know more today, obviously in terms of where those highs and lows are. But from Friday, you've got a lot of resistance above, which is going to be from the previous week. And I really don't mind waiting for the price to get above this area, because even something like this is still worth taking. So even if I miss this rally up, I'm most likely going to be able to get this here. So right now, I don't know where the price is going to go, or I don't really know where it's likely one way or another in terms of to the upside or to the downside. But what I do know is if we get that move up, a previous day highs and all of this previous support will most likely turn resistance, will turn support if we're going to go higher. So that's a trade that I would take. And then inside there, there'll most likely be a high to high, which lines up very closely to what I've already projected. And then I would take that into a full negative 100. That's what that would look like going into most likely the end of this week. And again, if that doesn't happen, just do the inverse, and I would expect that to the short side. So if we can't hold any of this support, wait for the lows to get broken and retested, and then most likely we go lower. But right now, your weekly magnitude is going to be pretty much testing this halfway back at 22,884s, and as high as this, close to this negative 100 if it trades. It would be like that if it traded. That would look really good. Something like that, okay? So you'd have your leg up, consolidation. So you'd have your rally, base, and then rally into weekly magnitude, full negative 100 completion, if that was the long side, right? But that's all I'm going to really look for. Very straightforward if then scenarios. Do not really care at all what we do inside that range. Just stick to the rules in terms of what you want to do above or below those areas. Let the market show its hands and follow the move. Yeah, pretty straightforward. I'm not going to overcomplicate it. And I will jump over to Whoop now and we'll try the stream out. I imagine the audio is still going to be a problem, so I might just have to manage it individually on Whoop's platform. If it works, amazing. If it doesn't, obviously, I'll have to just do it manually. But anyway, I will see you all on Whoop. Anyone on YouTube, I will see you all tomorrow.